What's going on, guys? It's Austin. I'm got a little bit of a different video here. I just saw that ICT, kind of controversial guy with his FVG strategy, kind of the SMC, smart money concept, supposedly the kind of pioneer of SMC. And anyway, I've been aware of him, but I thought he just posted this ICT mentorship core content month one, how market makers condition the market. So I thought, you know what? Let me click this video and just go at it with an open mind and try to learn something from this lecture here. So I'm going to be reacting to it and give you my honest thoughts. Let's get started.
Okay, folks, we are in the second teaching of a series of 8 for the month of September 2016. And you've seen this before, but I just want to bring this up to you one more time. This is the market efficiency paradigm. And what this generally is depicting, or what I was trying to communicate by drawing it out, is we as new traders are collectively part of this larger whole over here of uninformed money. And whether we acknowledge it or whether we believe it or what, we will invariably come in contact with the understanding that there is a smart money group of traders out there. And when I first got involved in trading, I didn't know anything about smart money. I just knew that the markets were potentially there and I could be profitable. And in fact, I was going to be profitable. I knew it. I couldn't believe that I'd ever lose money until I lost it. So when we as traders look at the marketplace as new investors, new traders, new speculators, we may or may not have the understanding that there is a smart money entity out there. And we as the larger populace of retail-minded trading, we think because of our sheer vastness, okay, we are the driver, okay, of this apparatus that's called the marketplace. And we tend to think of ourselves as the drive axle of what makes the markets go up and down, which is the
All right, that is just kind of not true in my opinion. I think it's honestly a much more mainstream idea. I mean, they talk about it CNBC, it's all over the place that retail traders don't move the market. Most people kind of know that, and I really haven't heard anyone in the trading community ever kind of propagate the idea that retail traders are the driving force in the market. Nobody really thinks that, and especially the kind of audience that's watching something like this supposedly they already have like maybe a little bit of experience day trading. They're probably not completely new to the markets. And I would be guessing that 90 plus percent of them don't believe that retail traders move the market. At least for me, at no point did I think that, but maybe there are some people out there that think that. But just on top of that, this whole idea that we have got uninformed money and smart money, right? This is kind of connecting into the smart money concepts. And this is just a very easy way to appeal to people that are, newer traders, right? They want to be able to hear that they're in a spot where, oh, they're going to learn something different. Like this is the true path. This is the true way to trade, right? All that stuff you thought you knew, forget about that, is a very it's a very cliche and just kind of, I can picture those newer traders funneling into that, right? But I think in reality, in my experience, trading, it's just not really the case. I think that I don't know. Let's continue.
that's the facade of supply and demand. That's the facade of trend lines driving price when it touches it. That's the facade of moving average crossovers causing prices to go up or down. That's the facade that's perpetuated, and we are led to believe that that's exactly what takes place, either in books or in seminars or in webinars or gurus, people. And I've done this when I was younger too. I was convinced that indicators drew price up and down, and I packed houses on America Online when I got on a chat room, and people were in there flocking to hear the things that I would discuss about stochastic and RSI and Williams percent R.
Yeah, so I mean, I think he gains a little bit of points here talking about how indicators are BS, that which is definitely true. I've never been a fan of indicators since day one. I've always said stay away from indicators. Again, guys, this is just me reacting to this. I'm not some expert, and so don't take what I say as gospel either. But the way that this guy's talking and coming across as kind of some genius, and in reality, kind of you got voices all around the trading atmosphere, that that have different strategies. But I think that the most reliable and credible ones are the ones that just you know that have simple strategies, very good discipline, and they're not creating PowerPoints and stuff like that. But I don't know. I think so far he's kind of egotistical.
And I was talking about three momentum indicators. If you're just going to follow momentum, just follow one. So if anyone knows more about being in this group over here, trust me, it's me. I've been in this group enough to know that I learned more about this group over here that doesn't like to draw too much attention to itself. But contrast that with everybody in the retail. We all have Twitter accounts. We all have MyFX books that we're sharing. We're all trying to be on Instagram showing Lamborghinis and whatever else, houses, cars, boats, yachts, girlfriends, they ain't even yours. Everybody is living large over here in the uninformed money. And smart money's over here quietly just doing their thing. Who's inside this small circle over here? The banks. Who's in here? Everybody on social media. Everybody in a retail account. All the gurus and teachers out there that have things that they're selling, services. And yes, I have a new service, but what I'm teaching you ain't available anywhere else. See, this group, this large populace of people, they think.
Yeah, yeah. I'm selling something too, right? I'm a guru too, but what I'm teaching you, right? This is the stuff. This is the hush hush stuff that you're really getting your money's worth. But here's where you have the gurus and the uninformed money, and I'm one of them. But trust me, guys, with this course, you're not gonna find this anywhere else.
And I was part of this group initially, they think that the sheer vastness and size of them is much more controlling in terms of where price is going to be driven higher or lower because of the buying and selling pressure that's equated to their mere involvement in price.
No, that is so wrong. I don't agree with that.
And that's a facade. This huge populace of trading people or traders community in the retail realm is really not that big. But we are led to believe that we are huge.
No, we're not. They talk about on CNBC all the time. This is mainstream that retail does not control the market. This is not a breaking idea. This is, he- it's clear to me that this guy is trying to sell the idea that retail is not in control. But we already know that. Like any trader with a lick of experience knows that retail is not moving the market. It's not some breaking, some crazy idea that is worth paying money for.
And we are given this idea of ourselves that we're giants. We push price around, and we don't. We don't. In fact, it's this small little group of traders. Okay, they're the ones that influence this entire mechanism that we call the markets. This small little group of traders is actually the drive shaft. And if this was a belt, like on a car, okay, like an alternator, this is the actual motor spinning the whole price higher or lower. It's not this big circle of people. So there has to be.
Ooh, it's not the big one. Look over here. It's the small one, guys. Don't get fooled, right? You're now in the little club that knows about the smart money. It's just so like it's so Guru 101, like just, there might be some grains of truth in what he's saying, but just, he's talking a lot, but he hasn't really, you know, we haven't really gotten much detail about, any details about how this whole grand scheme is working. There might be, again, there might be grains of truth to it, but this is just very vague so far.
A paradigm shift. See, if you're over here thinking that it's the group of traders that is online talking amongst themselves as a whole, they're the ones that make price go up and down because of their buying and selling interest. Because the supply and demand factors around them, that's what pushes price around. That's a facade. And I'm here to tell you that you need to put that to bed now, because I'm going to level everything you've ever imagined about the marketplace and how it really works. You have no idea where we're going. And
All right, you guys let me know in the comments, like, do you guys think that this is some crazy idea? Like, are you really getting your whole understanding of trading has just been leveled because now you know that there's like smart money that trades with big volume and is, really moving the market? Like, he's talking like my whole ideology just crumbled beneath my feet, and now I have this whole new mindset about trading. Never at any point did I think. I mean, it's just common sense, like what he's saying. So, just the bit about how retail doesn't control the market. Everybody knows that they are an element to the market, and they're not. They shouldn't be completely ignored. So he's wrong. If he's going as far to say that they don't have any effect on price, then he's definitely wrong about that. But he might be, but he's right that retail isn't like the, doesn't doesn't necessarily like control price. Absolutely, that's not true. But again, that's just obvious.
you need to leave this realm and this circle of people and their thought processes and transition and have a paradigm shift in your thought process about how the markets are efficient. Because they're not efficient for the speculators, they're efficient for the smart money. The banks drive price. Whether you want to accept it or not, that's what's going on. And the sooner you get to that understanding and expectation of what it is that's going on in price, it's not for your well-being, it's for the bank's well-being. It's
Okay, the problem is, like, he's talking about how the market is efficient for the smart money. I mean, think about what smart money has to do. They carry huge size, right? They got to get in and out of massive positions. So how is it? I don't know in what sense he's talking about how it's efficient for smart money, but smart money has to, size their orders in blocks, and they have to find spots where they can execute with that amount of size. They have to literally go out there and find liquidity versus retail traders who can pretty much just buy and sell willy-nilly on the open market kind of with no stress. I'm not really sure what he's talking about in terms of this efficiency, but
their business. They are the liquidity provider. Everyone else is liquidity. Are you a lamb or a lion?
are you a
Which
lamb or
one?
a lion?
Because one of us is going to eat meat, and the other one's going to stand there looking stupid eating grass.
What is he talking
I don't
about?
want to be a part of this herd. I didn't want to be a part of it once I understood where I was. I wanted to get out of there, and I wanted to live over here in this small little area.
Guys, don't be a sheep, be a lion. Like you can't make this up, man. You can't make this up.
And for years, I quietly made money doing nothing but focusing on the things I knew that this small group of entity of traders did. And I looked at these individuals initially with disdain, thinking, I'm going to come after you. I'm going to devour you. I'm going to do the same thing. And then as I looked at it more and more and heard stories about people and their lives, losing their homes, marriages, it tugged on me. And I didn't want to just be over here being like the banks. And then I bridged over into...
Um, okay. I'm gonna just make no co that was a very like sob story-esque, like, oh, I felt so bad for people losing their homes, and so that drove me to, I mean, all right, I'm gonna tiptoe around that, but that was weird.
what you saw me do in 2010. And I revealed a lot of things. In this mentorship, you're going to learn a whole lot. But it's not meant for you to share it on your YouTube channel. It's not meant for you to share it on your blog. It's not meant for you to pass it around on Twitter, Instagram, make torrents. It's not supposed to be there. It's only supposed to be between you and I. You're welcome to share this with this information with your children and your family members, Start a legacy, but don't make this common knowledge. It's going to happen. Some goober's going to take this stuff and be the one that, I'm the cool
Buy my course and like come and read my teachings, but don't share it with anybody. Like this is so sketch. This is so sketch. It feels very and the thing is, I have to say, like I've heard some stuff about ICT, and the more I research, just the more it becomes clear to me. It feels very sketchy, very kind of culty, and just it's so weird. I've never heard even traders that I don't agree with their strategies or what they're putting out there. You never hear them say stuff like this. This is just really crazy. Like I don't like it. Just weird, you know. Just between you and me, like I'm teaching you this. Like look at this BS, diagram here. It's whatever.
guy. I'm the one that got in there and made it all accessible to everyone else. She can feel like the hero. That you're not really doing yourself a favor. Let this stuff stay well hidden. You're paying for it.
So,
Appreciate it for what it is, and don't share it. It's not going mainstream. This is the group that we have. Whoever can make it in between October 1st and now, that's it. That's it. Because when we leave September and October, we're buttoning up all of the free tutorial stuff, and we're going right into the nuts and bolts of where we got to go to get to the latter months. See, when we come into the marketplace, we don't understand this. We think that this group that we're part of, we are the market. We are the
he keeps saying this, like, no, no, we don't. And I see this as a 2016 lecture, so maybe back then it was different, but I mean, at least this just does not apply now, at least. I don't, I find it hard to believe that anybody at any point, in the last 10 years at least, ever thought that, before maybe fine, before algos were really a problem, before, we do have much bigger smart money than we did before. The banks are much bigger than they were before, but so is retail. I don't know. I just feel like in the last 10 years, it's been pretty much common knowledge that retail trading is not the driving force of the market. That's been known.
market. We're the traders. We push price up and down. But if you were honest with yourself, if you've traded at any time and you look back on your trading, you probably looked at the market and you saw something like this. You knew something was going on, and you just couldn't put it together. You see these vague things that take place in the marketplace. Your stop gets run. It looked exactly like it was going to go up, but it came all the way down, knocked you out, and then went up. You see these things happening to you. You just can't figure it out. You know there's something to it. You've had the sensation that this is rigged. My broker's out to get me. It's not really your broker. It's the interbank feed that drives price against the funds, and the brokers are going to expand the spread as well on you and knock you out.
Oh yeah, the brokers are gonna expand the spread and knock you out. He says this stuff so quick, right off the cuff, but it's just just no. That you can't get away with saying stuff like that. Like it's just you can't. And he's got this blurry like analogy here about seeing the market and oh, you got stopped out and that's not gonna happen anymore because I'm gonna teach you, it just this is very just yeah, this is how they get you, man. He's got a very convincing and persuading voice, but if you really kind of listen to the nuts and bolts of what he's saying, uh, it's just it really kind of makes no sense. All right, I skipped forward a little bit. There's one more part of this lecture that I want to show you. He's talking about price delivery here, and basically he's talking about kind of the daily structure. Basically, there's a formula for futures trading and how the market moves on a daily basis. You can basically model it. He's talking about price delivery here. Let's listen in.
In the videos when I'm doing the live sessions with you, all aiming at your better understanding of price delivery. And when you understand these things, when you get to the level of month 8 and month 9 in the mentorship, you're going to be so strong at knowing what the next thing's going to happen in your price that you're studying. You'll know all these 4 things Okay? There's only certain processes that have to take place in a certain order. Like I said, it never goes consolidation reversal. It never does consolidation and retracement. It goes consolidation to an expansion move. There's an impulse leg, up or down. It's either going to retrace back down into where it just rallied up from, or it's going to rally back up into where it just dropped down from. The consolidation starts it all. They're going to run an expansion, and then once it expands, it's either going to come back and retrace and give another leg up or down, or it's going to reverse. And then from the reversal, start applying time. The general.
All right, so the problem with this is he's talking about what the market does on a daily basis, and basically you can model it, right? But the problem is these four things capture every possible move the market could do. So this is a model that the reason it can't be wrong isn't because it's precise and it's right. It's because it captures everything because it 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 defines every possible move the market can do from the beginning. So it's not so much that this is a model you should follow. It's just a fact about the market that it either consolidates or it moves up, or when we're talking about retracement, he's talking about it goes up and then it retraces part of the move and then keeps going. Or reversal where it goes one way and then it reverses the other way. I mean, that's just, yes, that's the way that the market can move. Like, those are the only ways that it can move. So, okay, great. Like, but the point is, how much is it gonna retrace, right? When should we buy? It varies. Or how deep is it gonna reverse? How far is it gonna expand before we go back into consolidation, right? Mixing all these up, that's the hard part. So it's not like this doesn't really help at all. I don't see how this helps.
Structure is consolidation in Asia, expansion, reverse in London, make the higher low of the day, then expand. Small consolidation in New York, retrace between 8 o'clock and 8:30 in the morning New York time, another expansion move, reverse, back to consolidation. You understand price delivery then. You will not
Like what? What?
learn it just by what I just
No.
explained to you just there. But
Oh, you won't learn it from what I just explained to you right there. That was just a bunch of, I don't know. But
you'll use this as a model that repeats itself over and over and over again.
yes, it's a model that repeats itself over and over because it's self-fulfilling. It defines itself. There is no this doesn't help. This is like saying you know, in a word there can be, 26 different letters, and so that's supposed to help you, figure out how to spell words. We need to know how to put the letters together, right? To spell words. We don't just giving us the letters isn't helpful. So that's this is like giving us the letters, like giving us the building blocks for how to piece the market together, but it's different every day. Every day is a new word, if you will. It's a new creation of the market. So, like, great. Now I understand price delivery. Like, apparently saying, there's more detail to it. So maybe, again, there's a possibility, I could be wrong here, but just right off the bat, I have to say I'm very confused, and it's just weird.
When you have higher time frame directional premise understood, and then you look at this price delivery algo, it's so easy to know what the price is going to do. Every single day since the last week of August, we've been together. And every single day, I've given you something that went right to the pip.
So, I mean, what he just said right there, I think there's an element of truth to that. That's certainly I do in my strategy where I zoom out higher time frames, look at the general trend, and then I start to piece together whether the market could, continue to consolidate, whether it's gonna expand, right? Have a move or retrace or pull back, or, there's certain things I look for when I zoom out on higher time frames, but certainly, right off the morning bell, a lot of times you get just chop right off the open. There's, you're not going to be following this weird formula that or model that he just came up with for trading, right? It's very overly simplistic and just not really helpful.
Or had an explosive direction move where you could have taken 50 to 60 pips out. And I don't trade that much every day. But I'm showing you by desensitizing you to fear and greed, there's no need for those things. What we're teaching is consistency, the ability to see these things happening all the time, and also exercising willpower on not wanting to make money. So you're suppressing the desire to make money, you're developing your patience, and you're learning a great deal. You have no understanding of how much you're learning just in these first two videos, but I'm telling you, you'll be able to look back on this months from now and say, man, that was a huge step I didn't appreciate until now. There's a certain process that the way the price is delivered, and it can't be changed. It won't be changed. And don't be afraid because you're learning it. 700 people is not going to turn the whole world around, okay, and they stop doing this. It's not. So, again,
All right, I don't even know what he's talking about at this point. You know, it's just weird. I did not find this that this 25-minute video was very helpful, and I don't know. I think just after watching this, you know, I'm slightly tainted of my view of ICT is not very good. And I have to say, from the stuff that I had seen even before watching this video, you know, I was already going into this with my doubts, but this is just, you know, confirming it because it's just weird. I don't find that this is very helpful, and it's just I don't even get what he's really going for here. It just feels very culty, and yes, it's true. The market consolidates and and it expands. But I mean, he's talked for 20 minutes now, and you know there are a lot of 20-minute YouTube videos you can watch on trading that are just going to help you a lot more than this. And I get that he's trying to funnel you into this idea that you know, us into this idea that you know the smart money's in control and we're learning something here that we're not going to find anywhere else. But you know what? If that's what he wants us to believe, this 20-minute video, it's just it's not doing it, right? This is not persuading me or trick, you know, I'm not convinced that I should keep watching to learn something here that I wouldn't find elsewhere. You know, this is just very it just reeks. It reeks, quite honestly, and I don't recommend it. So those are my honest thoughts, guys. If you did, you know, enjoy this video, hit that thumbs up. If you want me to react to something else, send it my way. Um, Join the Discord. You can do it there, and let me know what you guys think of this lecture in the comments section. I know I didn't show the full thing, but trust me, I watched it, and it's just, you know, it's more of the same basically. So, anyway, guys. That's all I got, and I'll be live tomorrow morning at 9:20 a.m. Hope to see you guys there, and see you in the next one.